Hey everyone, welcome back to CryptoCache. Thank you so much again for joining me here. Hope you're having a great day. Can you say Sunday pump? We can probably thank JD Vance here for a nice little pump there, saying that President Trump is willing to be a reasonable negotiator on China tariffs there. So, isn't that sweet? We get a nice little pump and a nice response there from that. And obviously, we can see the order blocks are starting to fill up here. We're also getting some CME gaps that are forming. We're going to talk about that, and then furthermore, too, stablecoin dominance, how that increase is causing a potential cause for concern there. So we're going to talk about that, and obviously some back-end liquidation data here, and just kind of verify some important stuff before we take some trades going into the work week here. So be sure to stick around. We got an important one today. All right, folks, before we jump into the backend data, just want to ask you quickly here, hit the like button, comment below, enable alerts if you want, stay abreast on these notifications here, just so you can kind of jump on into the videos as soon as they're uploaded. Now, what I want to talk about really quick is just kind of identifying some important areas here. We can see 113,500 is heavily guarded there with some sell orders, and 113,000 even for the lower buy orders. Now, that doesn't mean too much, honestly. By the time you see this video, that'll probably have changed. But the concept here is that we can see a very tight margin here. They're not like spread out super far. So it does imply there's a lot of selling pressure and some resistance, more specifically just above the current price point. If I recall correctly, 113 to 114,000 is kind of that resistance range for Bitcoin. So we'll identify that too. To touch on this here, currently the price point for Solana is at, what is it? We're looking at what, 191, and the CME gap basically, futures closed on Friday at 197. So we are due to continue higher for Solana based on that metric or that potential reality for us. And when we look at Ethereum, it's a different story here. It's actually the opposite, where we could actually see the price pull back to this 3850, because that's where we actually closed on Friday for Ethereum, is 3850. So that's kind of the opposite. And then obviously, if you recall from previously, Bitcoin does still have a CME gap as low as 109,000. That didn't officially get filled because, of course, the CME gaps can't be filled over the weekend. So obviously, unless we go lower, we're going to see that CME gap still remain open. So keep that in mind. Bitcoin and Ethereum have CME gaps below the price, and currently Solana has a CME gap above the price. That's kind of the concept there. So to touch on stablecoin dominance here, just to kind of give you some perspective and kind of how this factors in, we can see Bitcoin dominance pulled way back, and then also altcoin dominance pulled back too, of course. But if you see this, Bitcoin dominance is much tighter, or at least closer to where it left off, and there's a different indifference here with altcoins. So altcoins are struggling worse than Bitcoin, of course. We already know that, but the reason why this is relevant is that there's more money in stablecoin. Okay, so with the amount of stablecoin going up, that basically implies there's dry powder left, and we're more likely to see one of two things: either the money flow back into Bitcoin or into altcoins. Generally speaking, if Bitcoin can bottom out, we're probably more likely to see stablecoin flowing into altcoins, though. That's generally what we're going to be looking for, especially with altcoin dominance being kind of at a disparity right now. So when we look at liquidation, we want to double check a couple of things here. First of all, on the daily time frame, this doesn't tell us too much. This kind of gives us perspective, though, that there's a lot of liquidation kind of closer to the price action. 113,800 is the upper range, and then lower, we're looking at 112 or 111. Okay, so that's just the last 24 hours. That's kind of funky when you look at it, just based on the fact that it's a weekend, and price action is kind of weird on weekends, as we've already witnessed and discovered, if you haven't yet already known that. And we take a look here at the last 7 days, we can see there's not really a lot of liquidation, all things considered. This is normally a lot larger, but since there was such a big wipe to the downside, a lot of people are concerned about like late shorts, or either closing their position as the price goes up, or already in profit. So those are situations where the last 7 days doesn't tell us too much, but the monthly, the macro tells us a little bit more. These are larger timeframes, basically letting us know that 115,000 is that specific area of liquidation above the price. So that could be the next target for Bitcoin if it can break through that local resistance at 113.5. Lower below the price, 110 and 108 are the two other areas respectively. So just kind of remember those numbers: 108, 110, and 115. Those are three areas there where we could very well see liquidation events occur. Now, taking a look here, we kind of double check. We can see that area at about a 111 below the price, some local longs there. But generally speaking, there's not a whole heck of a lot here in the last 24 hours based on liquidation. So this is kind of minimal. This doesn't help us too much identifying specifically where the price may go. So we're going to want to rely on key level supports and resistances and areas of confluence on the chart to kind of get a well-rounded understanding of where the price could go for Bitcoin. But when we look at liquidation heat map here, it's kind of all over the place, but you can see there's pretty close to 1-to-1 ratios for a lot of coins. Ethereum, for example, Solana, they're closer to, just say, a similar amount of longs versus shorts getting liquidated. And that's kind of par for the course when you have these massive sell-offs like we just saw, and then that recovery, that slight relief rally recovery over the weekend. So that's kind of what we're looking at there. Now, taking a peek here, I haven't looked at this yet today. We can see our fear index is super low at 31. That basically implies you want to buy the fear, right? I talked about that yesterday. Buying these dips is probably a good idea from a spot bag perspective, because this was kind of an anomaly. This is a black swan event. Like the amount, like if you saw my statistics from yesterday, what was it? There was a post that I made regarding the size of liquidation. In other words, COVID crash was 1.2 billion liquidation. We saw 1.6 for FTX, but we saw 19.1 billion yesterday, or sorry, on Friday, of course. That was almost 20 times the size of COVID. So the whole point of this, obviously, there's more market makers in the industry now than there was when COVID occurred. Obviously, there's more money to be liquidated, but the same accord here, it was just way too much. It feels like some kind of scheme there where somebody really orchestrated this, and this 80% corrections from altcoins led to a lot of fear. But the concept here is that with the fear being so low, that's what they want. They want people to sell. They want people to get out. And now they can buy, right? So try not to be shaken out too hard, because honestly, from a macro perspective, this is actually a positive thing, or a good thing to be able to kind of add to your portfolio at lower price points. Outside of those of you who had liquidation events, you honestly shouldn't have had any liquidation, because if you're trading with stop losses and or just realistic margins and not using cross leverage, you're just fine. It's really not a big deal. But once more, not trying to downplay your losses if you had them, just saying that you shouldn't have had them if you're doing things responsibly. Easier said than done, of course. I know hindsight's 2020. Okay, anyways, the whole point of this is that altcoin season index is still super low, but it's rallying back. We're up to about 1.58 trillion altcoin market cap. So we're seeing a lot of purchasing power this weekend, likely the whales, but also some retail too. And if we look here as well, there's still a ton of coins that just got hit really super hard. So there's still a lot that are down. But from the overall perspective, the market cap kind of tells us that the top 100 are sustainable, and there's more likelihood of further upside based on that. So taking a look here as well at the back-end data, let's quickly understand where Bitcoin's at, kind of go from here. As we can see, we're starting to see the price recover, of course, with the fear index being low. So kind of hand in hand there, folks. That's kind of how they are. This is why you sell the greed. And you can see the greed was all green. You want to sell this area up here, of course, and buy this area down here. Obviously, it depends on the kind of trader that you are, but generally speaking, you're going to find more success buying fear and selling the greed. So that's kind of the concept. This is kind of all over the place. This doesn't tell us too much. We're going to see some false positives a lot with some of these metrics based on the fact that we saw such a significant flush of liquidity that it's hard to really gauge. But the thing that's consistent here is that whale traders are still trading, okay, even throughout the entire weekend. Normally you see this taper off on the weekends, but we can see the $100,000 to $1 million positions are very active right now. So they're calling the shots as per usual. They're buying this dip. What do you know? Big surprise. They hit they flush the toilet and they buy it right back up again. Okay, so it's standard trading 101. Unfortunately, folks, is very common. Now looking at open interest, this doesn't tell us a heck of a lot either, because it's very skewed based on the fact that we had that significant pullback. But we can see 117, 118 is that range, and secondary to that is roughly 114 to 115. Okay, so we should see some slowing pressure here once we hit the 114K range. Now, when we look at liquidation delta, let me go ahead and refresh this just to be safe. We can see it's tapering off a little bit, but it's still at about 30 billion in shorts. So we have way more shorts that are about to either get squeezed out, or there's just not enough longs in the market to offset that. Interestingly enough, the price is going up and there's not a lot of longs in the market. What does that mean for us? It means whale traders are active. Okay, so it's not awesome, but it is awesome if you are on the right side of those tracks, right? So when we take a look here at the last, I have the 3-day time frame pulled up on the left-hand side here. We can see 116,000 is the most amount of the heaviest concentration of shorts there. So we've got some easy round numbers to remember, right? 114,000 for open interest, 115 for that psychological support and resistance level, and then 116 here for the liquidation area. There's also more liquidation at 115 too, based on the last 24 hours. So there's a handful of little things there. So all that being said, what does that mean? Well, let's take a look at the chart here for Bitcoin, kind of go from there. We can see we're honoring our ascending trend line, albeit not the greatest. we are still establishing higher lows. So the macro perspective, as I mentioned yesterday, is still in decent shape for Bitcoin. While we are still under 50 in the RSI, we're going to see a lot of like bearish type of divergences here. We're still in decent shape in the overall sense based on, kind of the macro trend, right? You look at the weekly, look at the 3-day time frame. We have identified that yesterday. We're still in good shape, all right? Now, it doesn't mean we can't still go lower. It just implies if we go lower, we may not see that much of a correction. If I recall, like 108 to 110 is that significant support range for us, not just based on local lows, but also larger time frame confluence. Now, when we look at the 4-hour time frame, this isn't going to tell us a heck of a lot either, but it is telling us that we are shifting gears and that money flow index is starting to increase. We bottomed out at that 20 level, that threshold for the RSI, and then also MACD is converging here too. So a lot of good positive little things here kind of adding up to let us know that we are moderately back on track, but from a simple way to understand it, we still haven't, we haven't broken bullish whatsoever on the lower time frames. We're just kind of seeing this early pump, this little bit of relief, if you will, based on positive fundamental catalyst there, with the potential for tariffs being not as big of a deal as it originally probably was perceived, right? So all that combined together leads me to believe we're probably going to see 114 to 116. Just know from a larger time frame, our previous resistance, we spent a lot of time rejecting out at the 117 range. So if we get up to 117, that seems like a pretty solid area to consider either a short or securing profits on a long. Now, those are just my thoughts for the moment. That can totally change by this time tomorrow. All right, so hope that makes sense and I described it correctly. Let's go ahead and take a look at some altcoins next. All right, folks, take a quick look here at Ethereum and kind of just double check a few important things we talked about yesterday. For starters, we have this descending broadening wedge pattern here on the macro. So there's a decent chance we do see a continuation higher and a breakout, not because of that one thing, but also because we're establishing lower highs and lower lows. And when that occurs, you can only do that for so long, especially when a coin is overextended and we're seeing this nice little swift recovery from Bitcoin. So not saying we're going to go parabolic per se, but this is a very strong recovery to break through 4,000, that local resistance level for Ethereum, and that's a very good sign. Okay, so let's go ahead and take a look at ETH on the back end, kind of see if there's anything that might tell us a little bit more, and kind of go from there. So, based on open interest, we're not seeing a ton here. There is a couple of specific areas about 4240 upwards of 4300. So we've talked about 4300 previously being that significant area of concentration. So if we do see a rally here and a continuation for ETH, 4300 should be that next resistance range between 4250 and 4300. Looking at liquidation delta, it's tapering off to 20 billion. So we're seeing about 10 billion in shorts either liquidated or closed out. And then we also look here in the larger time frame. This is a 1 month on the left-hand side. There's not a lot here locally, so we're going to want to zoom in and kind of see. Let's just go ahead and look at the last 3 days because it's a little bit more appropriate for weekends. We can see there that 4150 is that heaviest concentration. There's about right around $4 billion in liquidation right at 4150. So 4150 to 4200, that's probably a good consideration for a take profit target there on this little rally. Taking a look at the daily time frame for ETH, just kind of double checking or kind of reiterating here. This is that descending trend, essentially a descending broadening wedge pattern. Once more, never perfect, no patterns are, but for the most part, we're working ourselves into a lower low, lower high pattern. And generally speaking, the price will inevitably recover at some point once, obviously, in this case, a fundamental catalyst occurs in a lot of ways where, President Trump's going to, give us some reprieve there with a good little, tariff talk with China. So all that said, we can see here as well, there's always some confluence at 4,300. Once more, the price continues to rally. That's a solid area to consider a short or a secure profit target location. What I mean by that is we got our point of control there. We've got a liquidation event there. We've got open interest there. There's a lot of reasons why 4,300 is the likely next either target or area of retracement. So just be mindful. That's the level I'm going to be looking for on this coin. And if you look at everything else, this is going to be the same scenario for most altcoins. The daily time frame is still going to look fairly bearish, right? Most of our coins that we're going to be looking at or have looked at are bouncing off that 20/30 support range on the RSI, and then the 4-hour time frames are going to be similar too, where they're going to look short-term bullish here, right? Where we can see this push towards 50 on the RSI, but once more, it's still kind of very early to tell. So the safer trader would wait for like a $4,000 reset on ETH to take a long, to let things cool off for a little bit. or the FOMO trader is going to be kind of jumping in and saying, shut up and take my money right now. So it really depends on who you are. It's not to say one's right or one's wrong. You can have good risk tolerance in both scenarios and be okay. But for the most part here, I'm waiting for maybe a retest of 4,000 as a potential reality for us before I take a long to the $4,300 range. Or if we continue to rally, a short at 4,250 to 4,300 makes sense right now. These are just some things I'm thinking about for the moment. I'm not just going to do this in the blind later tonight, set a limit order when I go to sleep, right? That's not what I do. I like to look at the the charts and reevaluate when we get there. So I recommend you do the same thing. Anyways, that is Ethereum for you in a nutshell. All right, folks, let's take a quick look here at Solana, double check a couple of things. Let's do a quick comparative analysis here on the right-hand side and see how well Solana is performing versus Bitcoin. It's looking pretty synonymous in a lot of ways. In fact, a little bit more of a correction to the downside when the price pulls back versus Bitcoin, but a stronger rally to the upside. So it's honestly a pretty close 1-to-1 ratio there for this coin for Bitcoin. So when you understand kind of the comparative nature of a coin versus Bitcoin, it helps you understand where it's going to go and where it's not going to go. In other words, we've identified some key levels for Bitcoin. We start seeing some slowing pressure in the 114 to 115K range. Solana will slow down in the 195 to 200 range. It's just kind of that comparative understanding. Now, if we look here at open interest, there's a lot at 184. So I think our local support is growing at the 180s. So 184 to 180 is potential support range for us. We've got some open interest spread out all the way above the price, upwards of 210. Doesn't tell us too much. Liquidation delta is shifting. It's not quite as strong of a shift as Ethereum, but it is tapering off to about 6 billion in shorts. So shorts are either closing in profits or getting squeezed out one way or the other. We're seeing that shorts starting to exit their positions. And this is a good sign. This is ultimately what you want, especially on a weekend, just because it provides better trading activity throughout the weekday, right? So last 3 days, let's look on the left-hand side, kind of see where we're at. We can see from a liquidation standpoint, majority of all liquidation has been fully swept. So all local liquidation for the weekend on Solana is effectively completed, if you will. So a simple way to understand it here is 195 was that local shelf. We're more likely to see the price consolidate in the current range and or pull back before it legs up again, just based on these things here. But once more, you don't take trades on that solely alone, but I can tell you in general, those are just good little rules to follow. When those things look either bullish or bearish, you want to kind of make that, consider that going into your trades. Now, when we look at the macro perspective here, we've maintained above the 200-day SMA, which is nice. We have some confluence there with our 0.382 fib level. So 170, 172 is a solid support range for Solana for the moment. When we look at our RSIs, there's not much here telling us too much, except that our money flow index is still looking pretty decent. In other words, there's a lot of money flowing back into this coin in the last 24 hours versus that of the last 7 days, or sorry, 14 days, that it's enough to warrant that this is still a good value. So people feel like this coin is going to be a good value based on the overall price point. And even though we are in a descending type of trend here, there's a decent chance we do continue to push to this 205 to 200 mark. Now, once more, if we kind of zoom out, we can see that's our point of control at 204. We've got our local high shelf there too as well. So for the most part, I would say that we're more likely to continue to the 195 to 205 range versus pulling back from here. But just know that's just like Ethereum at 4,300. This 205 level for Solana is probably likely going to be an initial rejection zone if we get there before we pull back, right? So once more, this is a weekend, folks. Volume is typically low. We had a nice little solid spike of volume here recently, but I wouldn't expect too much more from these coins this weekend. A lot of it really depends on how things are perceived in the market based on the overall sentiment with the ridiculous tariff stuff that's going on in the world. Okay, so that's kind of where we're at there for Solana. What are your thoughts? Why don't you comment below? All right, folks, so take a quick look here at SUI and just double check a couple of important factors here, more specifically the macro support range. We did see this 245 level hold fairly well. So we identified this yesterday that this is a potential support area based on local lows or previous lows back from June. That level held, so 245 is kind of like that strong support for this coin. Not proposing we're going to see that right away or again, but it is important to understand that that level is an important one for us here on the macro structure there. Okay, so just kind of log that for later. Let's take a look here at the comparative understanding here of these coins and just take a look. You can see that Bitcoin essentially broke its local high and SUI hasn't done so yet. Now that it could mean one of two things. It could imply that we're due for a short squeeze and the price is going to shoot up. But with us having a price moving average range percentile alert, leads me to believe that we have too much volume in a short amount of time here. Coming into a resistance, we're more likely to slow down and potentially pull back. I'm not proposing a short this coin at all, but it feels weird and kind of hard to want to recommend taking a long at resistance here. Once more, this is just a local resistance, smaller time frame, but it is still relevant nonetheless. So just be mindful. We're not quite out of the doghouse yet for SUI, but SUI is one of those coins that will, you'll consistently see like bearish divergences, and then out of nowhere it just takes off. So I don't bet against it. That's probably the best way to understand it. Anyways, open interest here for this coin is very skewed and flawed, just based on the simple fact that there's a significant gap there. The price pulled back so fast and hard, but we can see liquidation delta is letting us know that it's tapering off just like the other coins are. So we're seeing very similar behaviors here. And if we look at liquidation too, I'm curious in the last 3 days what the weekend liquidation looks like for this coin. It looks a little different than the Solana chart, doesn't it? And we can see $3 is that next heavy concentration, about 50 million in liquidation there, that chunk there. Roughly the same thing as well at 282. So between 280 and $3, we got a lot of liquidation. So from a liquidation standpoint, this coin has more propensity to break out and continue higher. So I do like what I see there. Now let's look here at the daily and just double check a couple of things. Our previous low was 310. Okay, so 245 and 310, that's kind of the range that we're likely going to be stuck within. So if we do end up rallying back up here, expect potential rejection at 310. And what that would do for us too is it would retest our ascending trend here, our higher low pattern, with a potential bearish back test, with the price rejecting off that level. It's pretty common for that to occur, to reject off the previous low and also the ascending trend line. Okay, so there's a chance we could see a bearish divergence in the 310 to $3 range, but between now and then, it would also seem sensible that SUI could continue to progress higher, especially if Bitcoin goes sideways. We look at our RSIs and our money flow index here. We're looking pretty good here for a nice bounce off that 30 level for the RSI and money flow index increasing. That's generally a favorable sign. So there's a lot of buying pressure for this coin. We look at the 4-hour time frame, we're seeing a convergence. 4-hour money flow index is increasing, RSI is right there with it, and stochastic swinging up. So these are all generally favorable signs for continuation higher. So it does seem more likely. I mean, if we were to kind of look at this here, there's a decent propensity for this coin to squeeze out some of these shorts at this level and to continue to rally to that 285 to $3 range. So if you're going to consider taking a long on this one, I would keep it tight, but you're slightly more favorable to consider a long position than a short on this coin, just based on how well it's rallied back here in this little range. And just generally speaking, the overall macro structure, and combine that with a liquidation, there's a lot more incentive for further upside in this coin. So you could be safe and wait for the pullback, but also consider taking a breakout trade here. Either way, it's risky no matter how you look at it. It's a weekend, folks. Try not to forget that. All right, let's take a look at the next one. All right, folks, let's take a quick look here at XRP, see what's going on. We have a lot of resistance above us in the 270s, but we're a little ways away from that. But just to let you know, we do have a macro resistance range in the 270 to 275 range. So try not to be a naive person that wants to take a long to $3 plus. The probability that's pretty low, considering we retested that range multiple times before we lost that as a support, and that's going to be the new resistance for us. So just remember 270, 275. Start considering securing profits at that point if you're going to be in a long between now and then. Between now and then, let's take a quick look at the comparative analysis and just kind of understand where XRP fares versus Bitcoin. And XRP faked us out pretty good yesterday. We actually had to close our long position there before it got out of hand, essentially with this nice little, we had this perfect little situation where the price action broke above its local high, was retesting, was ready to break out, and furthermore, just continue to pull right back with Bitcoin. So the concept here is that you are never truly safe trading on a weekend. So make sure you always use low leverage, low position size. But at this point, if we look at the current situation, we can see our local high here is fairly well broken, even though we haven't truly closed above it yet. But if you compare this with Bitcoin, it is looking weaker than Bitcoin is as far as its continuation. So in other words, the most recent like 3 hours have been really solid here, of course, consistent with Bitcoin. All coins are looking like that. But prior to that, it was selling off a lot harder than Bitcoin was, and it ended up becoming a pretty significant correction to the downside. So that kind of remembering that or knowing that going into a trade is important, right? So let's talk about what we're looking at on the back end and kind of see where we're at here. So when we look at XRP and the back end data, there's not a whole heck of a lot here telling us that we're in good shape to see any type of significant profit on the tighter margins here. What I'm getting at is that all of our open interest is so far away that it doesn't really help us understand specifically those local areas. I could zoom in on that, but honestly, it's pretty unfair data, if you will, based on the simple fact that it's such a we saw such a low price point for XRP. I mean, XRP went way low, right? So what I'm getting at here is if we look at that and then we can kind of combine that with the liquidation delta, we're looking at about 1.5 billion in shorts still currently in this coin. So there's still more favorability there in that regard, but also more propensity rather for the price action to get squeezed out. So we kind of, combine all that, it's kind of a bit messy, right? Oftentimes when you see these kind of messy charts and you're like trying to figure out if you should take a trade or not, when there's too many conflicting factors, it's not always the best consideration. So what I'm getting at here is if we look at liquidation, the heaviest chunk of liquidation at 250 was just swept. We do have 255 upwards of 260, kind of that little range there for the next potential leg up. But you kind of combine that with the lack of, the poor pairing with versus Bitcoin right now, and we can kind of see that XRP may not be the best racehorse to bet on, just based on the fact that it's not pumping quite as hard or has still those local resistances for us. Now, when we look at this here, quickly to double check the daily time frame, kind of give you some perspective. There is some confluence in the range here at about 255. That was a previous high range, so 255 to 260. You combine that with the liquidation and those levels. While we could run up to that level, there's a strong chance we reject at that range, okay? So I think the long story short here, if we kind of combine that and we look at that with other confirming factors here, we look at the RSI, money flow index here, we have a stronger disparity for money flow index for XRP, which means there's more selling pressure. And we look at that and we compare that with the 4-hour time frame, our money flow index is still low. This is not a good sign. Generally speaking, you want to see high money flow index or at least a rival MFI with the price action when you're taking a long position. In other words, the MFI should be higher right now in the 4-hour time frame, like most other coins are, to kind of show that it's paired well with Bitcoin or better than Bitcoin, and it's currently not. So once again, no shade on this coin. Just doesn't feel like a good coin to want to take a long into right now with this little resistance range. While we could continue to progress upwards of 270, 275, that's that significant resistance wall that I'm going to be heavily favoring a short position on, just based on how much we rejected out in that area in the recent past. So those are just kind of some thoughts that I'm thinking here. What are yours? Why don't you comment below? Love to hear it, and really want to say thanks again for just being a phenomenal part of my life. We'll look forward to seeing the next one. Don't forget to like, subscribe, and follow. Take care of yourself out there. Bye-bye.